Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 24th, 2026, and we're diving into Erie Indemnity's latest earnings report for the fourth quarter and full year of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Erie Indemnity, a major player in the insurance industry, has just released their financial results, and there's a lot to unpack, especially with their recent charitable contributions and how it impacted their earnings.
Revenue and profitability overview. Let's start with the top line. Erie Indemnity reported a net income of $63.4 million for the fourth quarter of 2025, a significant drop from $152 million in the same quarter last year. John, what are the key factors behind this decline?
The primary factor was a $100 million charitable contribution to the Erie Insurance Foundation, which significantly impacted their net income. Despite this, their operating income for the full year increased by 6%, driven by higher management fee revenues from policy issuance and renewal services.
That's interesting. So, while the charitable contribution affected the quarterly results, the overall operational performance for the year was strong?
Exactly. The increase in management fee revenue, particularly from policy issuance and renewal services, was a major contributor to their annual performance, offsetting some of the impacts from the charitable contribution.
Investment income and expenses. Moving on to investment income, Erie Indemnity reported $24.2 million for the fourth quarter and $84.9 million for the full year. How does this compare to last year, and what are the implications?
Investment income saw a healthy increase from $20.8 million in Q4 2024 to $24.2 million in Q4 2025, and from $69.3 million to $84.9 million for the full year. This growth is attributed to higher net investment income and limited partnership earnings, which bolstered their financial position despite rising expenses.
Speaking of expenses, there were notable increases in non-commission expenses and IT costs. Can you elaborate on these?
Certainly. Non-commission expenses rose by $25.5 million, driven by higher personnel and IT costs. The IT expenses alone increased by $24.3 million due to investments in personnel and technology infrastructure, which are crucial for maintaining their competitive edge.
EPS forecast and actual results. Let's discuss the earnings per share. Analysts had forecasted an EPS of $1.59 for the quarter, but the actual EPS came in at $1.21. What led to this discrepancy?
The significant difference is primarily due to the $100 million charitable contribution, which reduced the EPS by $1.54. Without this one-time expense, the EPS would have been much closer to the forecast, highlighting the company's underlying operational strength.
So the charitable contribution was a major factor in the EPS miss?
Absolutely. It was a strategic decision to support long-term sustainability for their charitable initiatives, but it did have a short-term impact on their earnings per share.
Operational efficiencies and future outlook. Looking ahead, what can investors expect from Erie Indemnity in terms of operational efficiencies and strategic initiatives?
Erie Indemnity has demonstrated strong operational efficiencies, with management fee revenue increasing by 8.2% and commissions by $175.6 million in 2025. Their strategic initiative to establish a charitable foundation is expected to enhance their brand and community presence, which could positively impact future growth.
That's promising. How does the company view its future prospects?
The company remains optimistic about its future, focusing on leveraging its strong market position and operational efficiencies to drive growth. The foundation initiative is also seen as a long-term investment in their community and brand reputation.